Hey there, it's Phil Ratcliffe with Rebel Financial, and thanks for joining into our live broadcast today. Today we've got Darshan Vyas with Loud Capital. Thanks so much for being here, Darshan.
I appreciate it. Thank you for the time.
Like me and him and Tony and everybody have been talking beforehand. This is going to be a great episode. All the things that they're doing, it's more than just their company. It's like all the people that you're involved in. There's like so many stories. Like we could never cover it in 15 minutes, but it should be entertaining. So first, just a little bit of intro. So Darshan went to OSU, graduated, you got into web and app development, and then, came around. I saw through multiple veins of really starting to help like innovators and being a part of incubators before starting Loud Capital. So why Loud? What does it mean?
Absolutely. So, it was a journey. I actually had an IT company, and I exited that company in 2015, and prior to that, I always thought, I'd have that company until I retired, and I never knew the venture space or the entrepreneurial space from a startup standpoint.
Yeah.
So when I made my first investment, I invested in the business model and not the entrepreneur, and that's where I learned some really hard lessons on investing. Where, first of all, I lost my money, but second of all, I realized when you bet on the entrepreneur, the business model can always pivot. Right, so ever since that point, when Naveen Goyal and myself, we partnered to create Loud Capital, we've always invested in the entrepreneur and then help with the business model. So instead of being silent investors, we're active and loud. So that's where the name Loud comes from.
Yeah, so it's a synonym for active, basically.
Correct, yes. So if you look at the Loud symbol, it also has a meaning to it as well. So, we try to help entrepreneurs go through the valley of death. There's a term.
I saw a blog on your website that was talking about that.
So, our goal is to kind of push them through and get them through to that Series A, profitable stage.
To success, not drought and starvation, right?
Yep. And so far, knock on wood, most, our investment thesis is working. So
that's awesome.
Our portfolio is doing extremely well.
Oh, cool. So what makes you guys different from kind of the older, larger VCs?
Well,
obviously that's the goal.
Yeah.
Right? Yeah.
Well, actually, to be honest, that's not the goal for us.
Not?
No. I got a compliment the other day, or I took it as a compliment. Someone told me that Loud is kind of like the young, spunky, the rebel, if you will, of VC group in the community. We don't do things the typical norm. Everything is done to help the entrepreneur. Mm-hmm. So traditionally, the way we've raised funds is not the way normal VCs do. We'll just raise money and fund companies, versus where traditional VCs will close a fund and then start making investments and things like that. But a lot of VCs grow vertically. They grow larger and larger funds, and at a certain point, it's really hard to get the good, proper ROI on larger funds.
Sure.
And so what we've decided to do is actually grow horizontally. So we've decided to open up offices in different markets and have smaller pockets of funds. And whenever there's a deal that's relevant to each of the funds, the goal is for all those funds to syndicate on that particular deal. So that's kind of our strategy.
So everybody's kind of out, kind of looking or hunting.
Correct.
And when you get something really good, you bring it back to everybody.
Exactly.
That's awesome.
And that's part of our strategy of bringing money back to the Midwest as well, or to Ohio. Mm-hmm. So it's been working well for us.
Awesome. You can make a new Silicon Valley here, right? Well, that's what they say. It's like, some of those companies that need those great thought, kind of workers. And so it's just like, we got to pay them 2.5 times more to be in that culture where they can commingle the ideas. So you almost got to get an economy of scale to get enough people in a certain place, hopefully here. Right, to where that starts to happen here.
Yeah. I mean, there's lots of trends showing that Columbus, it will never be Silicon Valley, and I personally don't want it to be Silicon Valley.
Will be the next thing.
Different. There's trends showing that Midwest is a hot spot for entrepreneurship, cheaper cost of living, cheaper way of doing business, but really great talented people, really great ideas, and better deals for investors as well. So there's going to be a lot of activity.
Because I think I read on your website there's like or maybe it was in a different interview, that there was like 800 VCs or something over, in California versus like 40 here.
Correct. Yes.
And so obviously there's got to be some better deals because there's just not as much competition to suck everything up, right?
And the great thing is all the investment groups, VCs, whatever you want to call them, they're very collaborative here. So they'll syndicate on deals versus VCs in other areas. They want to keep things
proprietary or secret. Yeah. Okay. So how does, for people that just don't know it all, like just bringing it down simple, how does venture capital work?
Absolutely. So, venture capital, started in the 60s where, providing growth capital to businesses that, needed money but didn't have the track record to really show banks, that
they get a loan.
Yeah, exactly. So the whole concept of venture capital is to provide capital for future growth. Traditionally, the way a venture fund works is, you raise a fund and you invest in, multiple deals. The fund manager, just like any wealth management, fund or whatever, takes their management fees on managing that fund. When the money is deployed and the investments are liquidating or exiting or going public, once those once the liquidation activity happens, then the disbursements go back out to the investors, and then the general fund will make a small percentage carried interest at the end of the life of the fund. And they typically, depending on what stage fund it is, it could be a 5-year fund or a 10-year fund.
Gotcha. So it usually does run those time periods are pretty standard.
Yes, correct.
Yeah. Okay. So then looking at the other side of the things, like for people that come to you that need funding, like how much can an entrepreneur raise, in early, not like later on like you're talking about. They're a lot of times will fund lots of times, right? But when they're early, they have an idea, they can't get a loan. How much can someone raise? And then on average, what do they give up? Right, because it's a trade. It's got to be a trade. There's got to be something for everyone. It's got to be win-win, right?
Yeah, absolutely. Yeah. So, early stage funding is definitely the most expensive, because you're giving a good, chunk of your company. The valuations that are pretty much set kind of in the community are anywhere from, $300,000 to $1 million, initial valuation. If you're a more experienced or seasoned entrepreneur and this is your, third or fourth venture, they're more feel more comfortable doing a convertible note, which you can basically provide some flexibility on the valuation. So there's usually a cap on the convertible note. So if I'm borrowing $1, I'm trying to take that dollar. I'm allowing that dollar to take my business as far as possible until I have to raise, my next round. And when I raise my next round, that's where the valuation is capped on a convertible note.
Gotcha.
So if I'm raising, $10,000 at a $5 million cap, making that up, that $10,000 should be able to hopefully, turn it into a, once again making it up, a $50 million valuation. Yeah. But then because there's a $5 million cap, now the investors get that $10,000 at a $5 million valuation.
Gotcha. So if you say the value of that business first, you said between 300,000 and what was it, 1.5 or what so, and so then it would just be how much the angel or venture gave them would be the percentage of the company that they own.
Correct.
Or what so. Okay. Okay. Cool. So if you gave like on the 1 million and you gave them 300,000, you would own 30% of the company.
Yes.
Cool. All right. For all of us that need it a little bit more simple.
Yes. Yes.
No, it's good. It's a good explanation because then we can break it down complicated and easy, and everybody gets it. So, so then it's not just you give them money, right? Because you're loud, right? You're gonna be active. So, how do you help them? In addition to just monetary injection, right?
Absolutely. So, when we invest, we try to do anything to try to help grow that business. If they need our help. There's certain entrepreneurs that are very seasoned and they don't need our help, and that's fine. They understand their space and all that stuff. But for the companies that do need our help, we typically find a project manager or advisor that can sit in or work with the company and help open up doors. We collectively ourselves open up doors for the entrepreneur. when we invest, we usually take the test of trying to identify if we can sell that product or service ourselves. If we can sell it ourselves, then we know that the entrepreneur will be successful at selling
It's a
their
matter of
product or
time and
service.
figuring out the
Correct.
formula,
Yeah,
right?
exactly. So that our goal is try to get those companies generating cash flow as soon as possible.
Okay. So, how many opportunities are available and how often? So I guess we could look at it from both sides.
Right.
From like if an entrepreneur is trying to come to you with an idea versus if an investor wants to get in. And I know you were telling me there was like 4 different ways people get in between the deal itself plus you have 3 different funds.
Correct.
Right?
Yes.
Yeah.
From an entrepreneur standpoint, they can approach us by emailing us or sending us a message on our website. And networking events, if there's a loud member, we give your card, and we could try to schedule a meeting. Traditionally, we've tried to be very accommodating with as many entrepreneurs as possible, but things are getting a little busy and tight right now, so we're forced to be a little bit more selective with our meetings. But at the end of the day, we still want to be helpful to the entrepreneurs and try to take as many as we can. And we see about 300 deals a month, from various entrepreneurs, coming from all over the U.S. And that's a good sign because they feel comfortable approaching us. We're not sitting in ivory towers or
You can't get through the lobby downstairs.
Exactly. So no, we like to be very entrepreneur friendly and be as supportive as possible. And we hope even if we can't invest, we can at least provide some kind of takeaways for that entrepreneur that will add value.
So maybe in the future it will help them come back and get something or help them succeed further. Or plus, like you said, you're very collaborative with the other ones. Maybe it's something that another investor would be interested in, even though it's not exactly what you guys want to do right now.
And from an investor standpoint, they can reach us through our portal or email us the same way as an entrepreneur would approach us. We're always looking for investors, accredited investors.
Always raising money.
Yes, we're always raising money. There's tons and tons of opportunities in the Midwest. A lot of great talent, a lot of smart entrepreneurs that they could go a long way with the funding. And so what Loud has been doing over the last about a year and a half is kind of took a step back on fundraising, but really educating the public on what venture capital is and how it benefits the community and how it can be a win-win situation for both entrepreneurs and investors. I mean, the goal is obviously to make money, but make money with a purpose.
Do you see that the success of what you do has, like traditional, like stocks and what's have correlation to the business cycle, the boom and the bust? Or are you guys pretty constant because you're investing in people who will probably be successful regardless of what the economy is doing? I mean, it interests me because you think about different things that could, like as an investment advisor myself, that the correlation is different, maybe to the stock market to like how you guys are doing. Yeah,
if the market, is low, there should be a trend where the investors are pulling. It's low for a reason because they're pulling money out.
Sure.
And so alternative investments is a great vehicle for investors to generate decent ROI on their investment. It is considered more risky alternative investment, but at the end of the day, in my opinion, the markets are risky too. There's lots of factors that
But do more of your businesses like fail when there's a recession or so, or do are they able to weather it pretty well?
Yeah, no. To be honest, we haven't been around on a true recession, so it's hard to tell.
On your portfolio.
Yeah, exactly. But from what I know about the space, the private industry is a kind of it's in its own little cocoon, right? They're able to thrive and still weather the capital, right? Exactly. And we have a lending side, which actually, if the economy does go or markets do go down, it actually helps our lending side of the business. So from a Loud Capital standpoint, we can still help these companies. We'll get better qualified companies that were traditionally bank friendly. Now they're coming to us for financing, and so it helps us out as well. So
different side of things.
In theory, it should be a win-win-win situation. If that were to ever happen.
Awesome. Well, let's share the screen real fast. And I just wanted to real quick just look at some of the investments that you guys have made in the companies around, and I think you guys, from looking at some of these companies, you'll recognize some of them, and a lot of them you were in, like you said, part of your strategy is really early.
Right.
So
Absolutely.
that's awesome. So hopefully we've got it up here. And actually, if you go to their website, the Loud Capital website, and you can just Google it and you'll find it, but it's loudvc or loud.vc. Then you can come and just look at these, and if you wanted to. And I hadn't heard of half of them, but I have heard of half of them, which I think is a tribute.
Yep, absolutely.
And just reading some of the stories of the ones that I hadn't heard of was awesome.
Yeah.
So is there anybody that you would just want to highlight or anything?
No, absolutely.
As we're looking at it real fast.
We have a great portfolio of companies. Actually, what's on the website is only a partial. Yeah. We have 37 companies now in our portfolio. We also do a lot of projects. But with that being said, I'd really like to give a shout out to Share for just really killing it this year. They've, I don't quote me on the numbers, but I think they've hired 40 to 70 employees in 2018 alone.
Wow.
And they're just growing in different markets, and they're just doing exceptionally well. Has helped our fund out a lot of quite a bit, but no, that's a great company.
And that's kind of like Uber or Lyft, except for businesses and communities and what. So
yeah, Uber and Lyft is typically B2C. They drive around consumers, but Share is strictly scheduled B2B ride transportation.
Yeah,
and so
Chase wanted to be cool and give people rides to work
Exactly.
instead of commuter benefits in terms of like reimbursing.
Yeah.
And then hopefully, as these things take on, hopefully it'll be better for everybody too, to not be stuck in traffic your whole life.
Absolutely.
Because we'll get the congestion down.
What's really cool about Share is that I'd like to say a lot of our investments have a purpose behind it, and we want to make an impact. And we kind of did the math with Share, and helping transport employees from maybe rural areas or underserved populations to more higher paying jobs.
Yeah.
We're able to fractionally increase the average rate of an employee.
Yeah.
So,
and hopefully their life is better to not be frustrated in
exactly.
traffic. And then I think I was looking on their website, and there's like Wi-Fi in there and stuff, so
Yeah.
you could actually do something either personal or even productivity-wise. So it's like you're taking back part of your life, right?
Yeah. Yep.
And then, like you said, with a purpose, like the hot chicken takeover and stuff, hiring people that a lot of times have a difficult time finding a job, and it just seems like a lot of the employees that work there are really happy to work there.
Yeah, hot chicken takeover is another great investment for us. Traditionally restaurants aren't really a venturable model, but with Joe DeLoss's strategy with people who need second chances, has really been a very impressive story that he's been able to tell, and because of that purpose, the brand has been doing exceptionally well.
Along with good hot chicken.
Yeah, exactly.
Well, good deal. You guys should check this out. Like we were talking, there's a hydrogen car company, which
that's
I think
under stealth mode right now.
Yeah, it's awesome. I mean, it's listed on there.
Yes.
And then the Nikola Labs is trying to make wireless energy.
Yes.
So I'm telling you, there's a lot of good stories there. And if you're an aspiring entrepreneur, reach out to Loud. And if you want to invest in especially local impact, I think that's really resonating with people right now in terms of us wanting to invest in each other.
Right, absolutely.
Rather than having to leverage everything to the bank.
Yes.
Right?
Yes.
Or, just to have to buy things on the stock market, in which the entrepreneurs have generally already cashed out of.
Yep.
And a lot of times we still don't have control over the board and leadership to do the things that we think are important for our community and what's so. So any kind of last advice or wisdom you want to leave with entrepreneurs or people that are looking to maybe get involved to make investments or what so?
Yeah, right now it's a good time in Columbus, in Midwest in general, just to kind of get into the space. Traditionally, people have this mindset, markets are the only way to make money. Entrepreneurship, I can't get into it because I'm not equipped for it. But the great thing is there's lots of other people in the community that are very like-minded. It's easy to form a team to create something exciting, and and then there's also lots of investors looking for other opportunities, whether they go through Loud or not. It could be a good relationship amongst investors and entrepreneurs, and
That's awesome.
I think something beautiful definitely can happen here in Columbus. Obviously, we'd love for those investors to come through us, but
Sure.
it's it should definitely be a space where people should educate themselves on of finding ways to make money, but also provide an impact.
Cool. So, just the kind of, we saw it in the headlines the last couple days. Amazon's pulling out of New York.
Yeah.
Any hope for us in Columbus that we might get HQ2?
I wish, but from what I read, and I forget what source it was, but I think it looks like they're going to Virginia, but I'm not sure. So
It'd be nice, right?
yes, it'd
Well,
be
I don't
nice.
know. It'd be a double-edged sword. More
Yeah,
traffic.
yes,
It'd be more
exactly.
pull on our
Yeah.
employees, but it'd be good for the area.
Yes.
And hopefully, building that community of like high-minded, good
Yeah.
innovators.
Well,
you
my
know,
mindset is instead of trying to get the Amazons to come here, let's create our own
build the next
Amazons.
one?
Yes.
Well, that's why I like that. That's one of my favorite quotes. I think that Jeff Bezos put out. It was like a month ago that when he was talking to his employees, he said, we're already on our way down. Our goal is to extend that as long as possible.
Yeah.
And so, that's pretty insightful right there to be able to say that. So, thanks so much for being here, Darshan.
Thank you. This was great.
And you guys, thank you so much for joining us. Join us next week. We're going to have Derek in with Give Back Hack, and then the week after, Katie Smith with Columbus CEO. It's a great lineup. Hope you guys are starting to warm up and de-thaw, and have a superb weekend.
Thank you, everyone.